weekend. Ira Epstein with your SPDR ETF video wrap-up, and this will be a weekly edition. So on the weekend, what I do is instead of doing the daily charts, I'll move to the weekly charts for the bigger picture as to what's going on. You don't need me to tell you that the market has been taken over by the COVID-19 situation. It is not something a central bank action can fix. And yes, Fed Chair Powell came out today and said, basically, the Fed has the markets back. The question is not when. They have your back. When do they pull the trigger seems to be the question. And I don't think, and I don't want them, from my point of view, to pull any trigger until we're at the peak of this virus and we're coming down the backside of it. Until that point, whatever you do is going to be wasted. You want stimulative action to have a meeting. You want cutting of interest rates. He doesn't have to worry about interest rates. The market's done it for him. 10-year notes are an all-time low. The Fed could do whatever they want. It's a wasted bullet until we're through that. That's my opinion. Now, unfortunately, I just heard as I'm doing this, which is just around 5 p.m., that another case has been discovered in America. So we'll hear about that tonight, and we're going to find out where that's all going. But it's only a question in my mind of more cases popping up in the United States, and the market is pricing that in. That's the volatility that we're seeing. And you know the game. You go home on a Friday and you're waiting to see what the news is going to be. The futures go bananas Sunday night. You got to walk into whatever Monday morning is in a SPDR ETF, and the markets already move pretty dramatically. That's the scenario you're playing with. France declared for small and medium-sized companies force majeures. So the situation, they're already realizing those small companies can't possibly meet their obligations if people stay home, blah, blah. And in the U.S., we're getting ready for that type of action. I'm not saying it's here. I'm saying we're getting ready. That's what they're telling us on TV, be it schools or anything else. And you know in Japan, schools are closed for the whole month of March until April to try to contain this virus. How far can it be from our doorstep? So when you look at the technology sector, it's like everything else. People are running to cash. It's a big unknown. It's not a financial emergency. It's a disease emergency, and you're seeing this market break away to the downside. And there's a lot of people, and I think you realize this, that came in since the first of the year and new money placed. They're caught right in this area. No question in my mind. When you take a look at what's going on in swing lines, the market had been in an uptrend unless you took out 94.71. That broke the pattern as a chartist, and wow, the market went from there another $10 lower. Remember, the sector is down 11% this week. That's a huge drop that you're seeing. I don't know that it means the sector's no good. I believe it's all about money panic. And disease is behind that panic. If the market rallies as a technician, I'd look for first resistance 92.16, and there is a gap. If we come back and I just show you the charts without the swing line, I can't do it. I'm doing it the wrong way. Here we go. This is it. There's a gap, and there's a gap on a lot of these charts. You know why we get so many gaps on the ETFs and the others versus this? Because you have the futures open typically 23 hours a day, and ETFs and SPDRs trade approximately 6.5 hours a day. So they walk into whatever the big event, if there was one, and that's why you get fair values versus where the futures is. You got to figure out where that is. So there's a technique to understanding these markets. As we break down the next support level, 84.81 down to the 100-day average. So we know where resistance is, where support might show up, and momentum is turned down. No surprise. Out of an uptrend, bias to the downside. In the industrial sector, you just slid through everything. Again, down 12.5% in 1 week. So you're looking at historic moves all the way through. You have the same in the energy sector, down 16% this week in this ETF. But it's not just this week. You've been coming off these highs for a long time. This market's in a total washout of this sector. You had a breakout on the charts. Now the question is, you had 2 days under, you've rallied back into the Bollinger Band and collapsed. So this was a true breakout back here, as I define one. As long as you get 2 weeks under, even if you rally back into the band, which is logical, the market's often still very much in a downtrend, and that's what this market is. So as a technician, take the name off, it's acting as I would think it should. You ended the uptrend in the NASDAQ if you take out this number, 217.18. You do have a pattern with the swing on of higher lows, higher highs. Momentum's still up. You lost all that in 1 week. Down for the week 10.63%. In the emerging market ETF, you're down 8.32%, but you've been already rolling. So this market's down about 20% overall, if not more, due to this whole break. Now, last week, if we take a look, the market had not been underneath the Bollinger Band or the 100-week average. It went through it, and that's normally a good support zone, like it didn't exist. And big break in the market. First big week under. It'll be very hard to get back over 65.13. It could happen. It's a 5% rally. We'll see if it can rally back into that Bollinger Band. In GLD, what the market did is it peaked out on the weekly charts against the upper Bollinger Band. Refused to stay over it. Didn't give you those 2 days over. This was a nice move right here. And let's look. This is why I often look to see on weeks, so you get 2 in a row. If you look at this week, you finished at 145.86 over the upper Bollinger Band. And again, that means until this market really dips under these lows here, it's a breakout to the upside. You pull back and you're riding the band with momentum up. Still riding the band. Now, the moment you take out one of these lows, you're stepping out of that trend. That's all you're looking for if it happens. And the market hasn't yet done it. So as bad a week as it was in GLD, the trend on this is still up. We're looking to see where the 18-day average comes in and if the market gets back there. Momentum did turn down, but on the weekly basis, you got to give it a whole week to see if it turns up. It can flutter on you. This is the market that let go completely. And this was your GDX. Now, it didn't have 2 weeks in a row of staying over that area. It did break out of this sideways action, and it just collapsed completely. It went, and this is so unusual, it went from an upper band to a lower band in 1 week and fell for the week 14.5%. Big move. Says the miners are in what? I don't know. I mean, it all happened. You were already down to your downside objective, so I don't know. TLT is a breakout to the upside. You can see that you're staying over that band. And I think you have to use this as the sideways action until you get back under this area here. It looks to me as though until it's bad, it's not bad. It's still looking bullish as can be, and that's where people are putting their money. Then we get to the euro. Now, the euro did something right through here. We take a look at how this market acted. On this 103.62 close, 103.65 closes under the band. As far as I'm concerned, that's a breakout to the downside. Market's still continuing down. This is the first rally, and we're looking to see, does it develop a pattern of lower highs, lower lows? In order to develop something bullish, it can't. If it gets back into an inside week, in other words, don't take out this week's high, it can develop lower highs. Got to wait and see what it's going to do. Momentum up, resistance just above the market, 104.73. Last, believe it or not, I decided to keep this chart up because it hasn't backed off either. It's one of the very few. It was down 10.5% TAN looking at the ETF, but you haven't done any real damage yet to the chart. Momentum is out of it to the upside. You're pulled back within the Bollinger Bands, and it had gotten pretty fancy. If you take a look here, I did that wrong, right through here. You'd been 1 week, 2 weeks, 3 weeks over the upper band, so it's a breakout to the upside, and you're getting that correction. We'll see what it does. I think some people are taking money off of the table in most markets that aren't defensive plays right now. Now remember, I'm putting window envelopes up in my SPDR ETF afternoon video, so I'm adding more features for you. And if you'd like to get a free copy, or not a copy, but to get in as a member login, you've got to do it as a free trial. So go to our website under free offers. You can see what we do. I typically record between 3:30 and 4 p.m. Monday through Friday because you don't open till 8:30 in the morning, the ETFs and SPDRs. So that gives you all the time you need to see what I'm seeing. Always remember that The difference between the SPDR and ETF is the market, many of them, is going to look to see what futures did, and that weight, up or down, often has something to do with the markets. Right now, it's COVID-19 more than anything else, and the weekend news is something you should pay attention to. I'm Ira Epstein. Have a great weekend, and I'll see you all come Monday.